Hello, this is Mike Swanson. You're listening to the Wall Street Window podcast. The odds are you found out about this episode because you got an email about it from my email list and you clicked the link to listen. If you're not on the list, click the link associated with this video to get on it. And if you're watching this on YouTube, click the subscribe button and then click the bell next to it so you'll get notifications from YouTube the next time a video is released. And today, I'm going to speak with David Skarica, who runs the website addictedtoprofits.net, about what's going on in the stock market and the gold market. Today, the stock market is down a little bit this morning after having gone up substantially since March, continuing the rally over last week too. But there's interesting things happening in many individual stocks that are quite remarkable. Stocks that are bankrupt are now soaring. People are really finding ways to trade these markets, jump in things, often for the very first time. And we mentioned some of these strange stocks, and also a few stocks that we both own too, that are small cap mining stocks. So one quick commercial break, and then I'll be talking with David Skarica of addictedtoprofits.net.
In Denial, Secret Wars with Airstrikes and Tanks by Larry Hancock. Secret wars became a staple of U.S. covert operations and are still happening today. Larry Hancock's book, In Denial, rips the cover off many of them. Using new files, it exposes things about the Bay of Pigs that no one has ever written about before. It shows why it really failed and why the United States did not learn from it. It also shows why other countries today are doing secret operations with more success. This is the book that puts what some want to deny into the light. In Denial, Secret Wars with Airstrikes and Tanks. Larry Hancock. For more information, go to larry-hancock.com. Pick up your copy of In Denial at amazon.com in digital or physical form.
Oh, I'm doing good. You sent me some interesting stuff this morning. One was a tweet by Charlie Bellilo, someone that we both follow on Twitter, of this stock. I've never heard of it. Nikola Corporation, 33 billion in market cap now. It's gone from nothing to being over $70, went up 26% yesterday, but it's got a bigger market cap than Ford and has absolutely zero revenue. So what is going on?
Well, you got Tesla, so you might as well have Nikola, right? So, anyhow, what it is that's kind of a Tesla clone or knockoff. You know, it's they're actually making, I guess, and it's been a prototype in the works, like their own electric truck. So, you know, because Tesla came up with that electric truck, and I guess now they're actually taking deposits for it. So they will have a tiny bit of revenue at some point. And I guess because there's this fervor now in the market, you know, the Nasdaq's at a new high, the S&P is only a few percent from its high. You know, I think everyone's, you know, we got all this cheap money. The Fed's printed a ton to bail everybody out, and you got people sitting around in lockdown, all these new Robinhood accounts, and people are just chasing stuff like this. And what they think is, if you go look at the way Tesla broke out in 2013, they probably think this is the next Tesla or something. And you know, but as much as I've been critical sometimes about Tesla and Elon Musk, at least it is a company and it does, you know, produce thousands of cars and have revenues, right? This is almost like if Tesla was trading back in 2007, you know, in its infancy when they weren't selling cars, right? This is like, you know, this is ridiculous what's going on. And again, it's partly because of the name, right? Because Tesla's, you know, named after Nikola Tesla, and this is named Nikola.
Well, another example of this sort of thing is the stock Hearts, HTZ. It's going bankrupt, and when a stock company goes bankrupt, eventually the stock ceases to trade, and anyone in it
loses everything they have in it. But this stock has gone from being 20 cents to going over $5. So people are trading this too.
The thing about
like
bankruptcy is there's two types of bankruptcy, right? There's like the Chapter 7 and Chapter 11. So you have the restructuring bankruptcy where actually a stock can continue the trade. Usually goes over the pink sheets while it's restructuring. And then it can come back because they sell off assets, the restructure the company, it can come back, right? But a lot of times, even then, there can be new equity. And then there's also just the Chapter 11 kind of like the kind of liquidation bankruptcy where you're talking about. I think that's what Hertz is doing. And of course, like Chesapeake is near bankruptcy, and that's another stock that's had this huge spike run. And by the way, what's really telling that these things are I don't want to say bullshit, but yeah, they are, or that the equity investors are probably wrong and just chasing stuff. Is you got to always look at these companies' bonds. And for example, with Chesapeake, its bonds are still trading 5 cents on the dollar, and it didn't budge even when the stock has gone from just over 10 to I think yesterday it was in over 60 or something, right? So that's really just telling you that it's just this kind of fervor and momentum traders. And I don't know, it's kind of similar to me that, when crypto was really hot, right? That people are just chasing stuff and looking at price action. And we've talked about these Robinhood apps, me and you off the air, that we and you both kind of look at these long-term historical charts or historical valuations or the whatnot. But most of these Robinhood charts, they don't go back more than a few months. And, they're the 10 and 5 minute charts for day traders and stuff like that. So I think that's what's happening is that something moved a little bit. And, probably these stocks that are going bankrupt, like Hertz and like Chesapeake, and they probably do have, the airlines aren't going bankrupt yet, but they, are hurting. A lot of these companies had huge short positions on them. So probably then you get this liquidity, you get these traders running the stock price up, and then that triggers the shorts, and then it comes kind of like full circle. But my opinion is when you start seeing this sort of reminds me of, where we were in the fourth quarter last year, which is incredible when you consider where the economy is now, where unemployment is, all this sort of thing. But we're just kind of seeing this fervor. And another thing about it too is I don't really follow all of these message boards or FinTwits and stuff like that these trading kind of message sites. But from what I've heard is that now these people are talking about like how easy it is to make money, and I'm up 60% on my Delta or doubled or tripled on my Chesapeake, stuff like that. I'm riding the Nikola stock high. So it just has a feeling to me that, I was looking at this being a bear market rally. It gone further than I thought. But when we look at the way the market's trading, we're probably getting late in the game. And actually what's amazing is because the drop at the top was much bigger this time. But if we go look at what happened in 2000 or 2007, you had this quick drop off the top in the April of 2000 and August of 2007, and then this kind of secondary high in August of 2000 and October 2007, where the S&P in each case basically made a double top and rolled over. And that looks like it might be happening again. I didn't expect that because those two drops I just talked about were only about 15, 16%, the initial drop. This was, almost 40% on the intraday. But it looks like, I guess maybe it is because the Federal Reserve has been so much more aggressive. If you go look at both of those two times, the Fed didn't start QE till 08, 09 after everything had collapsed. And in 2000, they didn't start even cutting rates till 2001. So I think maybe their aggressive stance has kind of led to this,
Well, as you've been speaking, I load up my Robinhood app, and both Nikolai and Hertz are stocks in the top 100. Over 87,000 Robinhood traders own Nikolai, and 146,000 own Hertz. And I'd have to look again, but I didn't see any gold stocks at all in the top 100 list.
And by the way, so if we can segue to that, this is why you and I are so bullish on the gold stocks. Okay, I think we're in this kind of consolidation phase now. They've had great runs since the bottom. Like they were really the first sector to hit new 252-week highs, right? Probably had the most V-type low of all the industries. But the fact that none of these retail people are in, no mainstream people are in, and the stuff we're doing, the junior miners, is what I think the people that are chasing these stocks are going to be interested in, because to me, the junior miners are similar to these little momentum stocks or similar to crypto or cannabis stocks, right? So I think that's what's really exciting to me, that we've had this great move. Some of our juniors have done really well. Some of our gold stocks have done really well, yet no one's in the sector. So to me, it's just like, and I kind of remember, when we first met each other in 2002, 2003, that's what it was like then. That, I remember we were at a small conference in Fort Lauderdale in early 03, and basically, the global bull market was about 2 years old, and no one was at this conference because the tech market was dead, and most of the companies there were gold markets, and there was no interest. So when I saw that, I was like, this is great. Like, this is this is probably the beginning of the bull market, right? So I think that's kind of what we're seeing now. As well, that there's no retail interest, but when that retail interest comes in, it's going to drive these prices of stocks a lot higher.
Well, I mean, today gold is up $22. Last week it went below 1,600. The GDX hit the 50-day moving average and is coming up off of it. So to me, this looks like, I still think it's some sort of range for the moment, consolidating the recent gains, but this looks like a buy point to me.
Well, and again, you have to look at the backdrop. Like, a lot of people just think the stock market is signaling, some kind of V bottom in the economy. And of course, what I think is what I just said. I just think this is a lot of cheap money. And then you got these people with their inflated unemployment checks that they got, because of COVID, that they're all day trading and stuff. So you have all these kind of unique factors that has kind of driven the market up artificially. And I think it's the exact opposite, that when the economy maybe has a W bottom or an L bottom, or it's our L recovery, whatever you want to call it, you're going to see the market have to kind of realize that. And of course, if you look at the Buffett indicator, the stock market, cap to GDP, well, because our market cap isn't much lower than we were at February at the highs, right? And GDPs are going to be a lot lower, 10 or 15% lower after the first quarter. Well, it's almost at a new all-time high, market cap to GDP.
It is amazing. So is this, I mean, the people buying it though, they're saying we're just had a temporary shutdown in the economy and now everything is going to roar back. So maybe that market cap to GDP can just go up forever from here.
Yeah, well, I think the issue is, and we've both talked about this, we were off air, is that if you go look at like these opening up are a bit of a scam, because like we were talking about what's going on. Mike and I used to go to Las Vegas all the time there. I live in the Bahamas, which is a tourist place. And then July 1st, they're going to open it up again. But if you look at the rules and regulations that they have in terms of the social distancing, getting, you have to take your temperature, the rules for eating at restaurants. It's like, who's going to really want to do that? Okay, I know that Vegas and the Bahamas are tourist zones, so that's a little different because, they're a little more sensitive to this. But just in general, in your day-to-day life, like I've almost like recently given up on going to a restaurant because it's such an unpleasant experience now with all this stuff, right? So, I think that's one of the issues as well, is that things aren't going to be the same. And if you say go to a closed shop, they might have a rule that only 10 people allowed in the shop because it's social distancing, right? And then that means that shop's going to employ less people because there's going to be less people in the shop, et cetera, right? So I think that's the issue, is that people aren't looking at it. Like, I don't know. I'm not really, I'm a market trader and I'm not really an economist, but I would think that probably half these jobs aren't coming back. So let's say, for argument's sake, the unemployment rate goes to 20%. Well, we were at 4 at the bottom. So even that's 16 points. Well, say it goes to 12. 12 is still the highest rate since the Great Depression. And then the early 80s recession, we went to about 11. So that's still not good. And that's still not going to lead to this huge kind of consumer boom or something like that,
Well, I'm reading this article you sent me about the Bahamas, and I don't know. It says shuttle and taxi drivers have been mandated to cut passenger capacity by 50%.
Yeah. Yeah,
It sounds
we have
strange.
these little kind of jitney, we have like little those little tack, those kind of little
Yeah, sure.
fans and stuff. Yeah, and you could jump in there. We used to do it when I lived in Nassau. You would jump in there and be like four or five
so
of
now
us
you
or
can only
something.
have two in there. It doesn't.
So
make
now you
sense.
can have only two. Or I think it's more like those things can fit 8 or 6, and now you can only have like 3 or 4. So and what's the casino's going to be like? And we were talking about Vegas. And Nassau has 2 casinos as well. It's like it just looked to me like in Vegas, like there was this first night where there was these pictures of it, places being full, but that was probably everyone just coming out after being on lockdown and just wanting to have some fun. And now it's like the places look like they're 90% empty. And I think that's what's gone on, by the way, in Macau and in China, that most of those casinos are 80-90% empty, even though they've been off lockdown for a few months now. So, I just think, and then I'm not going to get political, but in terms of the protests, that's also going to make people more apprehensive to maybe go out at night to restaurants and stuff like that, especially more in like the larger urban centers and stuff. So I just think you have all these factors which are not going to be positive, for the economy. And like in terms of that, the economic impact of some of the protests that happened that turned violent. Well, we were talking about this again off air. A lot of these businesses already were almost collapsing anyhow because of what happened with COVID. Well, kind of getting your store looted, that's the final nail in the coffin, right? And you'll probably make more money collecting your insurance than you would opening the place up, right? So I think there's all these factors where I think the economy is going to be significantly weaker. And by the way, another factor the market's not taking into, and again, not to get political, but this is just from an economic standpoint, that let's say the Democrats win all 3 phases of the government, they're probably going to roll back those corporate tax cuts. And that takes about $20 off the S&P earnings from about, the estimate is 170 next year to 150. And one of the reasons we had this big multiple expansion was because when Trump did those corporate tax cuts, all of a sudden companies were making 20-30% more overnight, right? So you could argue the market could rally 20-30%. So if that was true on the upside, that also might be true on the downside,
It's interesting times that we're in, but as far as individual stocks go, is there anyone in particular you got your eye on at this moment?
In terms of like a large cap stock, I'll do something a little different because of where the risk reward is. I'll give you a short. And a company that actually I think might have shorted in the past too is CarMax, KMX, right? And they have a bunch of, car lots all over the country. And obviously because of the lack of disposable income, the lack of jobs, I think a lot less cars are going to be sold. There's a huge amount of inventory. That stock is almost back to its high it was in February. So I think that is an excellent stock to look at as a short here. And I would look hard at that as a short because that's to me that's the exact type of stock that people are is not going to recover as quickly as people would. And then in terms of the longs, look, I'm always I still like these little juniors that Mike and I are doing. Like right now, there's one that started to break out called Inca One. Which is basically one of my I have companies do corporate subscriptions and I do interviews with them and the whatnot, right? Online. And Inca One is one of my corporate subscribers, but I kind of handpick the companies and I own it as well. But this is an interesting company. They produce about 25,000 ounces of gold a year. And they're selling, what they're doing is they're going to start selling the gold and silver coins on their own website, similar to what First Majestic does. And by the way, First Majestic would be another company I like, and I own that as well. But anyhow, and I own call options at First Majestic. But anyhow, I really like that because when they sell the physical, we all know there's this huge demand for physical, and there's a huge premium in the physical over the cash or futures market price. So I think that's going to really add to the bottom line. Like you think about it, they sell about 25,000 ounces a year. Like I said, if they can sell that gold for say 1,900 instead of 1,700. That's an extra $5 million, in cash flow and profit a year, right? So that's a stock I really like as well. And then another little one, we have, and I've done a few interviews, and they're just finishing off of financing, is Vendetta Vtt. That's a base metal project in Australia, and I think they're gonna have some others. They should have They got some exciting stuff going on as well. So, and it's already got a resource and that sort of thing. And I really like that one as well. And what I'm looking for now is these kind of juniors like that. I know Inca One's run a bit, but I'm kind of looking for these juniors that are kind of on that bottom floor. Like Mike and I are going to have a financing and another one coming up shortly as well, called Full Metal. And that's only got something like a $300,000 market cap. So I kind of like these juniors that are on the bottom floor like that can really move. And we've seen that happen with stocks like, say, Aftermath. You want to kind of get in on that low level when the company's got a few $1 million market cap, et cetera. And especially if you can get financings with the warrants, et cetera, that makes it even kind of more appealing. Because just look at it, just basic math. It's a lot easier, for Inca One to go from, a market cap of, I think it was like, whatever, 3 or 4 million when it was 20 cents to, 30 or 40 million, than say a 30 or 40 million company going to 300 or 400 million. So if you get a company like, let's get a market cap of just a few million, as long as they have something going on, I think in this kind of environment with gold and silver prices now acting strongly, these kind of companies can really move.
Well, as we wrap up, you also have a pay service. Could you tell people what that involves? I'll link to it so they can get it, because I highly recommend they do.
Yeah, I got two aspects. I got a silver membership, which is $35 a month. And then I got a platinum membership, which is a little more in depth. You can get access to these placements. You can ask me questions, in emails, etc. I do a few more updates. Just so you know, I'm going to be much more active, because the issue is I have a new book coming out, and I've been editing and writing this book. So that's prevented me from being as active as my trades have still been fantastic. It's just I haven't put up as much material of what I've liked. But anyhow, that's $35 a month for the first month, and then it's $70 a month after that. So that's a special deal where you can kind of try it out for a month. And let's say if you think that the platinum service isn't for you, you could just go to the silver service. So, and all these things I'm talking about, I really think the two biggest things I offer are, like I talk about CarMax, are kind of now these hedge and put positions, because I have a list of shorts that I've been waiting on, but now I think it's time to act over the next few months. And then I also think, again, the access to these private placements and deals, which, like a typical newsletter doesn't really give you. And like I said, Mike and we're kind of getting in on the floor level, a lot of these things. So that's another thing too. It's not like, a lot of these companies do secondary and offerings after the stocks run a lot. Well, we try to get in the first floor before they run,
Well, thanks for taking the time to talk to me and everyone else. We'll do another update soon.
Yeah, thanks for having me.